Hey traders, TG Watkins here. It is August 3rd when I'm recording this. I hope you guys are doing well out there. I know the market's been a little bit weak lately, to say the least, since we definitely got the Fitch news, the Fitch downgrade from AAA to AA plus as far as the US rating. All right, so remember, if you guys enjoy how I'm looking at the Moxie indicator and how it helps me trade and basically, see the market and everything that I need, you can come over to the Moxie Indicator Mastery. That is where that's basically the trading room. And if you want to pick up the Moxie indicator itself, you can do so over at Simpler Trading. We also have it on StockCharts.com, of course. And so let's dive into it. I think one of the most telling charts that I like to see through here, and if you guys remember, we discussed this last week, as we were saying, hey, it's really great to see that the number of stocks over their 20-day SMA was up here and persisting. I mean, it was at, 80, 90% and persisting, kept kind of hanging out there for a while. And I was like, yeah, but at some point, we're kind of looking for a pullback. We're like, hey, this market's pretty, almost too strong. It's kind of overbought, and we need to start seeing it at some point come back down. We've been looking for it. Even last week when I made the video, I think I made it Thursday, and that was the beginning of the pullback, and I thought we were going to get a little bit more of a pullback at that point, right after the FOMC. But then we did. We actually got it moved up after the FOMC, but then the Bank of Japan news came out, and that took the market down. But then the market just bounced right back, and I was like, oh, okay, well, still have to see how this goes. I'm still kind of looking around like we're very bullish. We need to come back down and recycle. And you can see now that's what that looks like. You can start to see the number of stocks over their 20-day SMA have definitely come back down there. It's at 46%. And then same thing over here, the number of stocks over their 50 SMA and their 200 SMA were just very, very high. The stocks over their 50 SMA were upwards of, I think, 89%, 90, 89%, like almost maxed out. So it's been a really great market. We've seen this, but we're going to have to get a refresh. We're going to need to have these things cycle back down and give us just more room to the upside. When everything is just maxed out, it's hard to keep going higher, and that's what we've been seeing through here. Now, the number of stocks over their daily, that could probably still go higher, so I do think that the market overall is strong. But and we don't see any negative divergence. That's really the thing. Like, yes, we got maxed out, but we're not seeing any negative divergence yet. So I still think we're in a strong market. In fact, the Chinese stocks are doing pretty well and leading. So really just kind of look around and find the stocks that are working for you. In fact, today, I'll get into it, but Amazon had earnings. They're up. Hayward had earnings. They're up. Of course, there are definitely a lot of names that are down. I'll show you GT and DT that went down. And then also Net, that one's gone up too. So, it's been pretty good. And then over here, we can see that just the number of new highs were kind of trending down, and then we're just barely getting a tick up of new lows. I'm not too concerned about that, but these are just different views to look at so you guys can see what's going on with the market. All right, and then if we look at the S&P, isn't this amazing? Don't you just love the Moxie indicator? There is your Moxie price trigger. That showed up on Thursday, last Thursday. And then so what that meant is that even though price stayed up, notice that the Moxie indicator now was below zero. That's technically an inverse trampoline move, which is a better watch out type situation. And sure enough, it took a few days for it to kick in, but it's finally here. And you can see we got that drop based on the Fitch rating information. The other thing is, if we were looking here on the daily chart, we were just really up here for quite some time, very, very far up there. Like, man, when is this thing going to start kicking in? Like, we should be getting a pullback sometime soon, and the market just wasn't pulling back. It kind of needed, apparently, something, some event, some news to really trigger this, but we've been looking for this for at least a week, and it finally kicked in. Usually we go to about the daily 21 initially as far as the big move down, and then we'll have to see about it recovering. You can even see here, generally the 21, a little bit further than the 21, but there's 21, 21, 21. Those were kind of the first initial moves to the downside. And then, in a stronger market, we'll continue to go up. In a weak market, we will at least get a bounce, and then we're going to have to see where it goes from there. And we could even just go sideways. So we could do some more chopping like that. So I don't want to short anything. Yes, there have been some serious down moves, but it's just not something I want to do. I'd rather just get out and wait for something to recycle. And right now I'm only bullish, and we just need to let things do what they're going to do and cycle back down. So that's the SPY. The other thing is, if we look at the, well, actually, let me go back over here. Let's look at the VIX. This was another thing that we were kind of talking about last time was, the VIX was at a very low area, there you go. It's just very low. And we could see that there's basically a double bottom going on. We even had a Moxie price trigger, and I think I did mention this last time. And if I didn't mention it here, then I talk to my subscribers about that because I see them on an everyday basis, and I make videos for them all the time. But you can see here that we had price below the 50, the Moxie indicator above 0. That's a trampoline move. So we knew that something was going to happen at some point, and we just didn't know exactly when that was going to be. But that's what we were looking for, and you could see that we definitely had signals or cues, clues. We just didn't know, okay, when is this thing going to pop off? And you can kind of see the same thing with the UVXY. And I didn't want to do anything because, man, okay, you had to be exactly right. There was no opportunity really to get in on this thing and trade it at all. You had to be in here and just somehow know that the market was going to drop. That was a news-based thing, so there was, for me, no opportunity to get in this. I would not have wanted to sit on this just for a few points of a move. But there you go. There's a pop-up. Now, as I said, I think that we should be expecting a bounce in the market. The market had 2 really big down days. It seems a little bit stretched to the downside. We should get some sort of relief pop, bounce, and then we'll have to see where the market goes from there, which also tells me that we should get UVXY to come back down a bit, and then we'll have to see after that. If we go over to the semis, if we look at the SOXX, this thing has been on an absolute tear, and let me see, we could draw something about this. Let's do a trend line, and we can kind of do that. Okay, and then color. Well, so let me show you this. Let's go through here, and we've been seeing basically this area, give or take a little bit like that, and then you can see here's another area. Okay, there we go, and then we can see. Let's get that kind of figured out, and then you can see it. I don't have it right now, but if you look, there's going to be a bit of a middle area through this. And what you can see is that the semis have been in this upper channel area for quite some time. And you can see that it's kind of done that before, and I don't have this drawn perfectly, but it's done it before, and it's needed to cycle back down to this lower area. And the one time here, you can see it actually just went sideways right in through this area until it got to the lower area of that channel. It would not surprise me if this eventually needs to go to that lower area, and I know that's a far ways down, so we kind of need to see what this wants to do. But if it just chills out and goes sideways a while and waits for that to come up, that's a possibility. So I think we should be aware of what this thing is doing and what the context is for the semis, for the market as a whole, and we need to understand that this thing is definitely overbought, and let's let it chill out a little bit. That being said, I do think that overall things are looking pretty good. We have the IWM looking fine, but yes, it's a little heavy over to on the top side. But if we look here, this seems to me like this is the beginning of a new trend. It's just we need to let the market just do its thing. Let it ebb, let it flow. And right now it's had a lot of flow and it needs to ebb. So it's very, very high. Let's let it come back down. And even the Dow, we talked about this before, the Dow has been breaking out and doing well. So we need to understand that the market isn't hot all the time, and here we've had a really, really hot streak, and now we just need to let it settle in a little bit. If we look at FXI, which is the Chinese index, look at what we've been doing here. So I think the Chinese market is actually looking really great. We have price getting back over the monthly 10, and we've had a huge bar here on the weekly time frame. Now, mind you, this was actually all a trampoline move. We have been in this name. We've been trading the leveraged ETF of FXI, and now we're up, we're looking good. And you can see this all price below the 50, the Moxie indicator above 0 has been a trampoline move. This is why we've been trading this and being in it. And if we look here on the daily chart for FXI, what do you see? You see a fresh Moxie price trigger. And so this is really what's been adding conviction to this move in this trade. Yeah, it got a little overbought the other day. It did pull back with that market news, but you know what? It's right back up. So this looked like a great buy the dip situation. It's probably going to end up being a trampoline move officially. And even here on the daily chart, you can see it pulled back basically into the daily 21. And so, yeah, the Chinese names are looking great. I don't know if you guys have been seeing what's been happening with NEO and XPEV. I think these things are upwards of 80% gains on them. So absolutely fantastic. We've seen the EV space in general has been really, really popping off. In fact, A little surprised to see this, but fantastic. EVgo, look at that big move. And you can see that the Moxie price trigger went green before earnings. So that was an earnings move. And here you could even see that it went positive up here as well on the hourly chart. And then we have Amazon, and it is up on earnings. I think it's making new highs. It should be somewhere up around here as far as earnings go. I was pretty impressed by this. If we look over here on Amazon, and of course, this is why I always say that earnings, anything goes for earnings. I was looking for this to kind of just settle in a little bit longer because it was up here at moving average resistance right there on the monthly and weekly time frame. I'm going to compare this to Boeing just to show you guys in a little bit, but I was kind of thinking like, okay, if it needs to take a big rest and a break, then maybe it comes down like this and just kind of chills out and then wait for the moving averages to come up to it like that. And on the daily charts, I don't even know what that would have looked like. It would just kind of go sideways a little bit and then finally move up eventually. But apparently with earnings, we did a double bottom off of the daily 50 and now we're making new highs. So then let me show you what Boeing looked like. And with Boeing, you can see a very similar thing to where it got overbought here and overbought here, and it basically just went sideways right there into these higher time frame moving averages. It kept getting held up and held by the weekly 21, and then finally popped up over there. And I think that was earnings as well. And if you look at on the daily chart, here you go. It did break down below the daily 50, but never really went anywhere. And that could actually be a sign that maybe this wants to go higher. There was an overall double bottom right there, and then it kind of spent some time doing this and then pop on earnings. So a lot of things are looking pretty good. Just taking some time. Just took a long time for Boeing to really consolidate and then finally move up. So on the let's see, Hayward. This is another one we were in. We got in, let's see, I think we got in somewhere around here on the pullback, and we just kind of wrote it out. We wanted, I knew that earnings was going to be coming up. I thought this was going to be good. Actually, we got in right there on that pullback. It was right there. And, I figured, hey, this thing looks good. Let's just roll the dice and see how earnings are. And so far, so good. So very happy about that. That looks like a really good, solid thing. So even though the market is pulling back, and even though there was definitely the Fitch downgrade, there are still quite a few names that are up. I mean, look, Amazon, Hayward, the Chinese names. It's not all bad out there. So I'm still bullish on this market. We just have to go with the flow. And part of that is look at Goodyear tire. But Goodyear tire was very overbought. It was very, very high there on the daily chart. And if we look here on the weekly time frame, it was very high also. You can see up here just, third ATR. It was just too high. So I'm going to chalk this up as just a technical thing. I don't know what they dropped it for. A lot of times they just do that. And we'll see if it eventually recoups. But that was a pretty good move right there off the daily 50. And then it just got a little overbought. And another one was DT. And this too was overbought. We took a trade, we got out break even because it wasn't working, and I thought, this thing's really pretty high. You can see up here, third ATR, big gap between price and the monthly 10, all that kind of stuff. Just really too high. And you could see again, third ATR and third ATR, and then it just didn't look very good. And with earnings coming up, I thought, we just don't want to hang on to that. So sure enough, it dropped on earnings, and so happy to not be in it. We'll see if this drop actually refreshes it. And then this could actually be, it's perfectly capable that this could be a nice winner again sometime in the future. It just has to reset. And this is some of the resetting that I'm going to be looking for in the market as a whole. And, just like this. Look at that. See how that had a nice drop and then a reset? That's what we're looking for. What if this drop eventually turns into that? And you just look for it to recover, and then you can get back up and go again. That's why I'm not too worried about this market. I think things are looking fine. You just kind of need to dance with the market. So thanks again, everybody. We'll see you at the next one.